Hello everyone. Welcome to the Prudent Finance Great Conversations podcast. Today we have with ourselves Mr. Nikhil Kothari, who is one of the finance industry veterans and also is the co-founder of FinAce and the director and CBO of Etica Wealth. It's an honor to have him here, and we are so excited for this conversation. Today, he will be giving us his invaluable and irreplaceable advice on personal finance and wealth creation. So, stay tuned and keep listening to the Prudent Finance. Thank you so much, Nikhil, for joining in. And I'll start with my pilot question. So, we'll go in back time and explore your life. How was your schooling? How was your career? And how you sought to become a wealth manager? How you co-founded like Ethica Wealth and Finance? How you planned everything with your brother Gajendra as well? Please tell us to our audience that how it went for you.
Okay. So Shubham, like as a family background, we all like all our cousins, and then we all come from a small town called Jorat in Assam. Okay, we may not be able to locate well or not know about much about it, but it's a place near Kaziranga in Assam. Okay, so we're born brought up there. Okay, and then we did our schooling in Jorat itself. Okay, since there were lack of colleges in Jorat, like there are only one or two colleges, and obviously the college is not that great. So for our studies, our parents, my mom wanted me to go outside of Jorat and do the studies in outside Jorat, and then complete your studies and come back to business, right? And in a typical Maori family business, right, it's a culture that okay, after your college or after your then if you start joining a family business, at least come for a couple of hours in the shop, so you start learning the trades of business, right? So after my 10th, when I was getting into college, and in Assam, we used to have like a college for 3-4 months only, right? So when my college, like 3-4 months were completed in 11th, my uncle told me that why don't you come to the shop every day in the morning and stay till like 4 o'clock, 5 o'clock, and then you can go and do your rest of the work. So that's how we, like after 10th also we joined the family business, right? And then, but my mom said that, okay, if you continue like this one, you won't complete your graduation also. So better you go outside and complete your graduation. And then if you want, you can come back and join the family business at any point of time, right? So I went to Bangalore for my studies. Okay. So when I was in Bangalore, then that time I came to a course called as CFP, Certified Financial Planning course.
Okay.
Right? And so so while doing my graduation, I completed this course called as CFP. Okay. That time it was not a very, very popular course. It has become very popular now. Right?
Yes,
back in
correct.
2004 to 7. So I did that CFP course, and that course interested me a lot about personal finance. Right? It's a very interesting subject, and really like the whole concepts of present value of money, what is time value of money once, how you plan your retirement, how you plan your insurance.
Correct.
So that course got me interested in the personal finance. Along with my CFP, I did other exams, like NSE used to have a capital market exam, like a derivative exam, a mutual fund exam. So I gave all those exams at the same time. So during my graduation, when I did my CFP and I did all this NSE and ISM courses exam, right, I got interested in this personal finance, right, and I did my internship in a personal finance boutique firm, right. So that's how the interest in the personal finance came into as a thing. Then back in 2009, right, me, Gajendra, and my other cousin Virendra, who was in Bombay, we had a call that we realized that India is literate, but India is not financially literate.
Correct.
Okay, what I mean by that, people are educated, but when it comes to money, right, they're not well aware that what all options are there, how they should invest, how to plan for your investments, and so on and so forth. Right. And when the GFC happens, global financial crisis in 2008 happened, right? What we realized that that's a great time when markets are corrected by 30, 40, 50%. People should invest in equities, right? But people were panicking, and instead of investing more, they were withdrawing the existing investments, right? So people, because in 2004 to 7, it was a one-way rally bull market for equity markets, and people invested in equities, okay, with the assumption that the market will continue to remain like that. And when the GFC happened, they thought that no, market is corrected 30%, that may withdraw all my money and put my money FDs again, right?
Yes.
So what we realized that people are not aware of how to look at investing when it comes to equities, right? And second thing is
Yes.
that people were not doing goal-based investing. People are just doing random investments that, okay, I've got money, this funds have done good, let me invest that money. But they if they don't require the money for 10 years, they should not have withdrawn the money in GFC. If markets have fallen, because they require the money after 10 years, why should we be worried about today? But people are not
Yes.
linking the investment with a goal. So they didn't have a clear idea that when I need the money. Okay. And because of the price, because of sudden fall in the market, and then you say paper loss in your portfolio, you withdraw the money. Right. So
Yes.
what we
Correct.
realized that we need to educate people how to do your goal-based investing. Right. That you need to invest with your goal in mind. So if your goal is 10 years down the line, you should not be worried about it and invest in equities. If your goal is only 1 year down the line, do not invest in equities. Right. So you should invest every money of yours with a goal in mind. And if your goal is far off, why should you worry right now? Right. So this is what we wanted to start start educate people, and that's why we thought that let's start our own firm, right? And it will take a decade or so, right? But if we do good work and only in the interest of client, right? And if we really educate client on how to look at investing and do goal-based investing, in 10 years down the line, we can in a decade or so we can create a great personal financial firm, right? So that's how the idea of Etica was born over a call, which lasted for 1.5 hours, right? And then we thought that let's start our own firm. So, and to start our own firm, we thought that let's first come to Bombay because that's a financial capital, right? So
Yes.
all of us, let's come to Bombay, and if we all three sits together, you and brainstorm on everything, we can create a great organization over a long period of time. So then Gajendra quit his job from UK. I will quit my job from Bangalore. And my other cousin was working in a broking firm in Mumbai. He quit his job, right? And in 2009 November, the Attica was born. Okay. Now, from day one, we were very clear that we want to start as a professional firm, right? So we want to have a proper office where client can come and visit us, right? We need to have a operation team. We need to have a runner boy. So there's obviously cost involved, but we want to run as a professional firm, right? We don't want to see someone just working from home and then just doing like an agent relationship, right?
Yes.
So we
Yes.
want to work as a pure wealth management firm, which purely focus on long-term goal-based investing, right? And then invest with the goal in mind. Okay. So then Virendra started the firm, right? The idea was because there's we've all been in Bombay. We didn't want to take any money from our parents. So that we have to manage our cash flows also at the same time, right?
Yes.
And
Yes.
Gajendra
It's
had a
true.
lock-in for with a bond, which he has to continue for one more year when he come back to India with ETI.
Mm.
So we thought that, okay, let's begin to start the business. After 1 year, Gajendra will join, and after 1 year, I will join. So that the cash flows also managed. We don't have to worry about the cash flows. At the same time, we can continue to run like a professional firm,
Yes.
right?
Yes. True.
So that's how we started. And in 2012, Virendra had to go back to Assam because that time the Attica was just growing slowly. And at the same time, the family business was a cash cow for us, right?
Yes. Yes.
And parents were saying that, okay, you all can't be in Bombay. One of us, why don't you come and join the family business? Because you don't know what will happen here, but at least the family business, someone needs there.
Yes.
So
You
Virendra
have that.
went back there. And that point of time, before 2012, we had a broking also, and we had a mutual fund distribution also. In 2012, me and Gajendra said that we don't have any experience in broking. So let's not focus on broking at all, right? Only focus on wealth management, mutual fund, and goal-based investing, right? And in 2012, we had a EM of 5 crores, right? And
Okay.
by sheer focus for last 13 years, only mutual funds and the wealth management workers, today the EM is roughly 2,800 crores of asset
Oh
under
wow.
management, right? So that has
Brilliant.
been the journey for Etica for last 15 odd years, right? So the idea is very simple. People are literate, but not financially literate. You need to educate people from a goal-based investing. And if people start investing and people focus on, and over a period of time, right? The whole business, this business is a long gestation period business, right? First 5, 7 years, you don't see any revenue. But after 5, 7 years, when a client have experienced a good positive thing, right? Then clients start becoming your referral and become your sales force. They only go and keep on telling to other friends and families, right? That's where the word of mouth works in. So they say,
Yes.
okay, why don't you do investments? Why don't you go and approach this firm, right?
Mm-hmm.
And then referrals start coming in, right? So when we
Yes.
say the
Yes.
investing is
Yes.
all about compounding, the
Mm.
business of investing also all about compounding. So first five,
Mm.
7 years, you work hard, and after that, it just takes it's the
It's
compounding just works in your favor.
Yes, 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 and it's so inspiring to see, like, Nikhil, that it's courageous as well to start a firm like that, and that too in financial crisis as well. That it's quite risky when people are running away. You guys thought that why shouldn't we do that? So yeah, it's truly inspiring for me as well as the audience as well who must be seeing it. So then dive into the next questions. Talking about like markets, they are always uncertain at present as well. We can see that either they are flat, sometimes they're going down, sometimes there's a euphoria, sometimes people are quite invested in it. So nowadays people need, do you believe that nowadays people need more hand holding, and there are so many platforms, there are so many trading things to do, there are so many, you can say, products, that nowadays people need more hand holding in wealth creation? And there are also people like in my known as well that have quite a lot of wealth or cash, but they don't know how to manage it, or they don't know how to like invest in something which will give them returns. So do you believe that we need more platforms like Etica, or we need more wealth managers like Etica, and to help build their journey here?
So first of all, coming to uncertain the market, that's why you always say
Mm,
time is more important than timing, right?
okay,
Market will
okay.
always remain uncertain, right?
Mm,
If there was certain in
mm,
the market, then you won't get returns, right?
yes, yes.
Rather than it will always get a return like a fixed deposit, right?
Yes, yes.
So market will always remain uncertain. But what you have
Mm,
to believe in that is the country growing. If the country keeps
mm,
on growing, right,
mm,
equity markets will give you return over a long period of time, right? But
okay.
idea is that there will always be news flows, which
Mm,
sometimes will be positive and sometimes will be negative, right? And you have to
mm,
manage your behavior during this ups and downs. And if you're able to manage your behavior, right, you will create wealth in the long term. So there's no second thoughts towards it. But one
okay.
has to manage his behavior. Okay.
Mm,
Now, obviously, with the whole technology coming in, with the whole disruption coming in, the business
mm,
cycles will become smaller now, right? Earlier, we
okay.
used to see that companies last for like 15, 20 years, right? It should take
Mm,
good
mm,
number of like 10, it should take a decade for something to disrupt a new business, right? A new
okay.
business coming in
Yes,
will take
yes,
10 years for
yes.
him to come to a
Mm,
level of
mm,
established
mm,
player.
mm,
But
mm,
nowadays, we're seeing that a new player come in and can in 3 years he can become a market leader, or 4 years he can become a
mm,
market leader,
mm.
right?
Yes,
So
yes, correct.
technology has changed quite a lot in terms of the cycles of invest businesses, right? The
Mm,
business cycles have gone through a huge change going now, and it will only accelerate going forward, right?
okay.
So the uncertainty or the volatility will increase incrementally also, right?
Mm, mm,
And that's where role of a personal financial professional comes in, right? So
okay.
what we
Mm,
always say that apart from recommending client in terms of doing a goal-based investing and recommending client, the major
mm,
focus of us is to manage their behavior,
mm,
right? And when the uncertainty happens, right,
mm,
money is very dear to everyone, right?
mm,
And
mm,
when
mm.
when the uncertainty happens, when you actually see your portfolio going down, right, you feel
Mm,
panic about it, right?
yes,
And that's the
yes.
time how we can manage the behavior of the individual, right? And
Mm,
make sure
mm,
that okay, if his goal is after 10 years down the line, he should not be
mm,
worried about it and
mm,
continue
mm,
to stay invested. At the same
mm,
time, if markets have done very good and he sees that okay, put all my money in equities, right? And if he needs money after 1 year, you have to educate him that it's not put money in equities for 1 year, right? That's where the role
obviously.
of
Yeah.
a personal finance professional comes in. And if
Mm,
you're able to manage this behavior of the client, I think every
mm,
client will have a great experience for a long period of time, right?
mm,
So
mm,
my whole idea is that markets will remain uncertain, will continue to remain uncertain, right?
mm,
Uh, but to manage this behavior of the individual, you need lots and lots of personal finance professionals, right?
mm, mm,
And you need a firm who are really committed to clients' interest. See, this industry has a very thin line between my interest and client interest,
mm,
right?
mm.
Because there will always be option where you sell a other product which can give you high commission, right?
Yes,
But you
true.
know that that may not be interest in the clients, right?
Mm,
So,
mm,
but
mm,
so you have to make sure that you when you're in this business, you're not looking at revenue for next 5 7 years. You're
mm,
only going
mm,
to work for the best interest of the client. And as I discussed with
mm,
you, that this is a long gestation period business, right?
mm,
So if you don't
mm.
have any revenue targets, you'll always do good for the client. And once you do good for the client over a 5 7 year, the client becomes a sales force for you, and they will start
Yes,
giving referrals and referrals, right? So you
yes,
don't have to
yes.
worry about sourcing lead after 5 7 years of business,
Mm,
right?
mm,
But first 5 7 years, you have to make sure that you work only in the interest of client, educate him, manage his behavior, give you a positive experience, and then the business will keep on growing.
Yes, it's so nice, and I think that part comes in when you also said that financial literacy. So financial literacy is quite important here as well, and managing your psychological aspects as well, because it's in markets like numbers are not the only things, and wealth managers help us manage that behavior or the psychological thing, which truly takes you beyond others. And like I was reading a report and I was seeing that only like 10% people are earning properly in stock markets and others are losing as well. So those 10% people I think need wealth managers and create like personal finance advisors who will guide them and who will manage their behavior as well as wealth to increase it in the further coming up years. So it's truly honest about that, I believe.
So I'll give you a statistic. SEBI says that out of 100 people who do trading, 93 people lose money,
Hmm.
right?
Hmm. Hmm.
So the whole people believe that they're smart enough and they can trade
Yes.
and they can make money. But SEBI
Hmm.
data
Hmm.
clearly saying that 90 people have lost money,
Yes.
right, by
Yes.
doing
Especially in
trading and by
options and
doing
all that.
options.
Yes.
So the role of a personal finance professional is to make sure that you when you're taking this gambling part of it, right, that should not be more than 5-10% of your overall portfolio. And that portfolio should, if even if it goes down, shouldn't impact your major goals, right? So if that portfolio is going to impact your goals, right, then you're doing something wrong as an investor, right? So investors should know that what is the risk capital I have, which I can speculate, but my 90% of the money should be in the core long-term investing, right? Which is
Yep.
important
Yep.
to meet my goals,
Yep.
right? So individual will always be biased towards behavior, right? So I'm saying when you see something doing so, there's always a overconfidence bias, right? So what happens is that when you do 5 trades and say out of 3 or 4 has gone right, now you believe that you are the masters in this trading, right?
Right.
And
Right.
first you start with a very small amount, but since you got your 3 or 4 trades right in the first 5, right, you increase your bet substantially, right?
Yes.
And then
Yes. That's the
one
gamble.
one loss can wipe out all your returns what you made in the first 4, because when you start a very small amount and then you increase your bets.
Hmm.
So you
Hmm.
always have an overconfidence bias, right?
Yep.
Second
Yep.
is a recency bias. So what happened when people start doing on their own? They always look at, okay, in last 2 years markets have done very good, so market will keep on doing like that for all their life, right?
Yes. Yes.
And
Yes.
they don't follow asset allocation approach and they increase their equity exposure substantially because they say, okay, my debt is only giving me 7% return, whereas my equity is giving 20% return. So let me
Hmm.
increase
Hmm.
my equity exposure substantially,
Hmm.
right?
Hmm.
And if the and one bad pays in the market, then you will lose the confidence and then again come back to debt, right?
Hmm.
So you follow complete reverse of it. When what Warren Buffett says you should buy low and sell high, here
Hmm.
you
Hmm.
always buying high and selling low,
Hmm. Hmm.
right?
Hmm.
So that's where the behavioral coaching is very, very critical,
Yep. Yep.
right? So people get to overconfidence bias, people get to recency bias, right?
Hmm.
If
Hmm.
there's a
Hmm.
bad news, people extrapolate every bad news,
Yes.
right?
Yes.
And they
And
say, okay, when COVID happened, people say, okay, no, now the whole world will go for and so let me withdraw all my money. And you won't believe that their lockdown happened. That was the lowest level of the stock. After the market only
hmm.
went up. But
Yes.
so market will always react. Market will always discount it before the news is out, right? Market will never react when the news is out, okay? But investors will always react when the news is out and not before that. So that's a two different view it is there, and that's why you need a personal finance professional to help you guide this on.
Hmm.
That what is
Hmm.
known to everyone is already factored in the market,
Hmm.
right?
Hmm.
Market will always react to something unknown
Hmm.
and
Hmm.
that you cannot know right now. So that's why you should plan your finances that you should invest with the goals in mind. That if I need money after 10 years, I don't worry about it. Right? Let me invest in equities. If I need money after 1 year, no matter whether markets are cheap or expensive, I'll invest my money in debt. If I need money after 3-4 years, I'll invest in hybrid funds. So if you make your asset allocation based on your goals, then you will not go wrong even if whatever happens in the market.
True, true, true. And I think on a follow up on that, I believe that there are a lot of investors who came in after COVID, so they saw quite a huge set of returns, and they saw that they're doing well, and they saw almost 10x going. Some of the companies were going almost 10x, and 1 or 2 years as well. But now we see there is a quite stagnancy, and the valuations have also come down. Although the companies are making profit, exceptional profits, good companies, fundamentally great companies are making exceptional profits, but still we are not able to see those returns which were there. So, according to you, what is the right return which a person can earn substantially in a year, and he should remain satisfied with it? Because people are becoming more, you can say, aggressive towards gaining returns after the COVID rally. Okay, so now they want, okay, why the stock is not going 10x, and due to that, they invest in low fundamental companies or companies which are not good and which are not judged by anyone, and they are like bets which you talked about, like they are just news, they are just rumors, and this is not a fundamental company which will grow in the time. So according to you, what should be the best like return, like according to a range which should be in a year and people should be satisfied about it, and how people should see in the coming times the returns for a company, what are the multiples and so on?
Okay. So see, market will always give you return what you deserve and not what you want, right?
Hmm.
And the deserve always, what you deserve will always depend on your behavior.
Hmm.
Okay, that how well you behave during the uncertainties.
Hmm.
Okay. Now coming to broad range of returns, right? See, equity market over long period of time should give you
Hmm.
12 to 15% return, right?
Okay.
How
Okay.
this 12 to 15% return derives it? So India will grow at 6 to 8% in terms of GDP growth, the nominal GDP growth, right? The real GDP growth. And then over and above, you take 4 to 5% inflation, right?
Hmm.
So you're talking about 12% normal GDP growth return, right?
Hmm.
So that will be normal GDP growth. So that was India will grow. Now, since in GDP, you have agriculture also and other component also, they grow at a far lower rate. So if I
Hmm.
take manufacturing and services and the listed companies, they may
Hmm.
grow 1 to 2% higher than the normal GDP growth,
Yes.
right?
Yes.
So
Correct.
that's where the return of 13 to 14% comes in. If you invest in slightly mid-sized companies who are small in size, they're able to grow faster than the country's growth, right? That's how you can make 15% return on in a mid and small cap. So on a long-term average, right, for equity return should be in the range of 12 to 15%, depending on which type of segments you're investing in,
Okay.
right?
Okay.
The additional return of what we say the 15 to 18 comes
Hmm.
in because
Hmm.
of two components, right? One is that at times, can you take a tactical call when some sectors have not worked very well,
Hmm. Hmm.
right? And you take a contra bet, okay, the sector has not performed for last 3, 4 years and the valuations are very, very cheap. And once the sector rebounds again, it will give you extra return because it will not given return for a couple of years. So when it gives the return, it will give return for the past years also,
Yes.
right?
Yes. True.
So when you are able to take some contra calls,
Hmm.
some technical calls in your portfolio,
Hmm.
and the second thing is when markets correct substantially, can you
Hmm.
add slightly more in your portfolio? Like when the COVID
Hmm.
happened, can you add little more in your equity investing? Can you move
That,
from debt to equity? Right, that will
yes.
give you alpha of 2, 3 extra% return. So
Okay.
on an
Okay.
average, you can expect 12 to 15% return. The remaining
Hmm.
2 to 4% comes from your contra bets
Hmm.
as well as from your buying in dips.
Hmm.
That how
Hmm.
you can
Hmm.
make 16 to 18% return on the equity portfolio. So
Hmm.
on an
Hmm.
average, you should be happy with 12 to 15% return over a long period of time, right? And delta may come in as when you behave properly and
Hmm.
you behave contra to what the general public is behaving, right?
Yes. Yes.
Then you
Yes.
make extra return on that part of it.
Hmm.
But
Hmm.
even if you compound at 14 to
Hmm.
15%,
Hmm.
right?
Hmm.
Effectively, your money is getting double in 4.5, 5 years,
Hmm.
right? And there's a compounding machine. So your 100 will become 200, say in 5 years. In next
Hmm.
5 years, 200 becomes 400. It doesn't increase by 100 rupees. It increases by 200
Yeah.
rupees,
4 times it's
right?
happened.
And the
Three
next
times.
4 times, right? 100 will become 200, 200 will become 400.
Hmm.
And in
Four
next
times.
5 years, 400 will become 800.
Hmm. That's the
Right?
compounding power. Yeah.
That's the
Yep.
compounding game. So equity is not about 5 years, 10 years. It's all about 20 to 30 years. If you can compound your money at 15% for next 20 years, so the wealth you will create for yourself, right? And
Hmm.
no other
Hmm.
asset class can give this compounding return for long
Hmm.
period of time,
Hmm.
right?
Yes.
So
Yes.
the idea is that you should not be looking at one company was giving you 10x, right?
Hmm.
And your
Hmm.
return will happen. So companies are not grown up by 10x. So
Hmm.
there's some companies that give you return because they didn't do very well for last 5, 7 years. They've not given any return
Hmm.
for like 7, 8 years. And that's why
Hmm.
all returns come now, right?
Yes.
Will you
Yes. Yes.
continue to do that? The answer is no, right? And
Hmm.
if you're buying with the expectation of say your money will get double in 1 year or 2 years, then you're
Hmm.
getting in the wrong asset class. Because
Hmm.
in
Hmm.
last 6 months, 6 to 8 months, you realize that when market corrects, right? Those
Yes.
companies corrected by 40-50% also.
Yes. It's brutal.
Right?
Yes.
So you have to be investing in fundamental sound companies with the
Mm.
expectation of 12 to 15% over a long period of time.
Okay. Yeah, that's nice, and that's quite good insight, because I've often seen, like, being a young investor myself and talking to my friends and my seniors as well. What I have seen is either people will sit on a lot of cash or they will just invest all. So that's a extreme behavior which I have seen, and people are not able to save cash, like even 25% or 30% in their portfolios. And when you said that the opportunity to buy, so they are not either able to time the market, or they are not able to save that amount of cash to buy the dips and so on. So on follow up on that, I'll ask you that what should be the right tactical bets or allocations in your portfolio, like for timing the market or staying in the full market, and so on, like, and how you believe that that should be done by young investors and so on.
See, fundamentally, we are not a believer of timing the market, right? And you
Okay.
can't time the market.
Okay.
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 So we believe that you have to be invested with most of some time, because
Okay.
over a long
Okay.
period of time, markets will give you return, right? So what we normally follow at our personal portfolio also. Okay. So out of 100 rupees which we earn, right? And or say for example, out of 100 rupees which you have to invest in the as a investments, right? 80% of our investments goes to SIPs, right?
Oh,
So
okay.
every month, every out of 100 rupees which I'm earning, 80% of that money which I've set aside for my investments will go as a SIPs to equity funds,
Nice.
right?
Okay.
15 to 20% of my portfolio, right, is kept
Mm.
as a very, very conservative fund,
Okay.
right? So 80% of money is invested all the time, right?
Okay.
15 to 20% I keep with that money, which
Mm.
whenever I get a very good contract calls, right,
Okay.
I
Yes.
put that money at that point of time. So just to give you perspective, like say for example, in 2020 when the COVID happened, right? So I was building my portfolio from 2010 onwards, right? So
Yes.
from
Yes.
17, 18, 19, 20, whatever money I was, so 80% money was invested in equities, 20% which was kept in was accumulating in the conservative fund. So when the COVID happened, I put all that money in equities. So that gave me the
Oh.
opportunity to invest in market. And that time, apart from equities, where I invest in equities, the sectors were not doing very well. Like the PSU as a sector, right? Which was not doing at all from 2018 to
Yeah, it
2020.
was
It
so.
was
Yeah, it was
underperforming.
flat and
So
down. Yep.
I put my money in small caps. I put my money in PSU as a theme, right? And those kinds, right? So all my money which I've kept from the 20% reserve was invested in equity at that point of time, right?
Okay.
For last
Okay.
2.5 years, again I'm doing the same thing. 80% of money is going in equities, 20% is kept as a reserve, right? Which I deploy whenever there's an opportunity. So when this opportunity came in, when market corrected by 18-19%, I put some money there, right? At time, so recently I got an opportunity that when Chinese markets are not doing good, right? I put some of my money in China fund,
Yes.
right?
Yes.
So that all comes up out of that 20% of the portfolio where I can take tactical calls whenever I
Yes.
see any
Yes.
opportunity. The remaining 80% of my portfolio
Staying
is
fully
purely
invested.
invested fully invested, no matter whatever happens. The SIP does that both. If markets are going down, it buys more units for me,
Correct.
right? And the 80% money keeps on investing through SIPs in diversified equity funds. So that's a strategy I'll follow, and that's a strategy I'll say to all the people, right? Like 80%
Yes.
of money should always be invested because you can't time the market.
Yes.
20% of
Yes.
money you can take that call where you get an opportunity, you should be going all out and investing that money.
Nice, nice, nice. So, coming to that as well, like, I'll just ask some questions which will be related to you as well. So, what is the SIP you do per month, as your own personal or family SIP which you do, and what is the current value of your portfolio as an amount, if you say, at present?
So when we started with very humble thing, right? As I told
Yes,
you that
yes.
we started in 2010, right? And that time we started SIP of 10,000 rupees. Okay.
Okay.
So me and my brother combined together. Okay. But what is the one thing which we did all our life is that keep on increasing the SIP as our income keeps on increasing.
Okay.
Right.
Okay.
So as I discussed, we start the business every year. The income keeps on increasing, right? The SIP number has to increase. So it started
Okay.
with 10,000, went to 50,000, went to a lakh rupees, went to 5 lakh rupees, right? Last year we were doing 30 lakh rupees. This year we're doing 40 lakh rupees SIP. So me and my brother together combined together, we're doing 40 lakh rupees SIP every month on month.
Oh,
right?
that's brilliant.
And
Yes.
yeah, so that's the SIP we've done. So this 40 lakh
Mm.
didn't happen in 1 year, right?
Yes,
As I
yes,
don't,
of course.
what I'm trying to say. A lot of people saying, okay, I don't have so much money.
Mm.
How do such a big SIPs? Right? You
Mm.
don't have to
Mm.
start with such a big amount. You can start.
Mm.
We started with 10,000 rupees, right? And the
Mm.
idea was that every year we keep on increasing our SIPs, which most of people don't do it,
Yes,
right? People
true. Yes.
start with 5, 10,000 rupees and they keep on
They
doing the same
can.
amount, right? So idea
Mm.
is that keep on increasing SIP every year on year. So from the 10,000 today we are doing 40 lakh rupees SIP every month on month, and
Mm.
with this SIP only, right,
Mm.
the portfolio has grown to 55 crores today,
Oh, that's brilliant.
right?
That's
So
brilliant.
it's not only because of capital investment, it's also because of the
Mm.
market return, right?
Mm.
Because
Mm.
we have disciplined and kept on investing without timing the market has done their work, right? And 50, 60% of the overall net worth which I'm talking about is the market return,
True.
right?
Mm.
So this is where the investing works in place.
Yeah, I think the best take which I will take it from here is that stay invested, stay fully financially literate, and always take help if you don't have that much knowledge. Take help from any wealth managers or like any people who know that area quite well, because that will help your wealth build in long term. You might lose a lot of wealth just not by taking that service, but in long term, like let's say 30 years, you will be quite ahead out of the 100 or 1,000 people which are still investing self based, which are not knowledgeable that much about the fundamentals of a company and so on how the markets are tactfully behaving and almost managing their own behavior as well.
So
So,
that's the managing behavior is the most important thing, and this
hmm,
is where for us SIP has worked in our favor. So
hmm,
if I've
hmm,
used my own brain every time, right, I've
yes,
not
yes,
created this much wealth. The
hmm,
reason was I
hmm,
was disciplined, and with the SIP gives you that discipline. That by default it takes out money from your bank account and invests in the equity fund, right? Whether the markets are up or down doesn't care, right? And the average of the cost. So because they kept that discipline of 80% of your money will always keep on going to SIPs,
hmm,
right? And
hmm,
keep on increasing SIPs every year on year,
hmm, hmm.
right? That has worked amazingly well for us. That it created corpus of 55 crores, right? And
Okay.
it was
Hmm,
only
hmm,
because of discipline and the
hmm.
patience to stay
Yes,
invested for
yes.
15 years, right?
Hmm,
People don't have
hmm.
patience to stay invested for 10, 15 years. People see some return in 2 years and say, let me book the profit, right?
Okay.
And they don't
Yeah.
let the
Hmm,
compounding to work in your favor,
hmm,
right?
hmm, hmm.
And the magic is not till now. The magic will happen after now. So I'll just tell you, it has taken 15 years to create a corpus of 55 crores. If I don't do anything, and assuming that market gives me 12 to 15% return over the next 5
Hmm,
years, by
hmm.
default it will become 100 crores without putting any more money,
Yeah, yeah, that's the
right?
magic.
And
Yes.
in that, right, so that's the magic of compounding, right?
Hmm,
So it took me
hmm.
15 years to make a portfolio of 55 crores, and in next 4 to 5 years, it will become 100 crores plus by sheer compounding. Right? So this is what I tell all the investors that have patience, stay invested for 20, 25 years. First 15 years, you work for money. After your money works for you.
Yes, 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 yes. It's so like impressive. It's changed my mind and perspective. Um, coming to like some of the last couple of questions, and then we can end up. So we have seen that India's future, our Prime Minister, Mr. Narendra Modi, have also said that by 2047 we are going into Amrit Kal. So we will grow Indian economy quite greatly, and we'll grow to a like $10 trillion of economy and maybe more even, as said by Mukesh Ambani and so on. So as a investor and a wealth manager, you or yourself, for clients and basically people who are investing in India, what all sectors first of all, and for example, what all themes you see that will be growing in India which were not grown earlier, and also for now, what do you suggest that people will be investing in the coming times as the markets will be becoming more opened up? They were down for some times, but now I think they will grow up quite more in the coming times when the economy will grow, the GDP will grow, and so on. So what all sectors and themes you believe that were quite low for some time will now perform a bit, and that to contribute to the Amrit Kal, which Prime Minister said.
So if you have to achieve, if you have to, by 2047, if you have to talk about America, we're talking about like 25 to 30 trillion economy in next
Hmm.
20 years, right?
Yes. Yes.
We are right now $4 trillion, right?
Hmm.
We are
Hmm.
talking about it will grow by roughly 6 times, right?
Hmm.
That's
Hmm.
the
Hmm.
size you're looking at. So amount
Hmm.
of wealth
Hmm.
we created, we'll create 6 times more wealth in next
Hmm.
20 years.
Hmm.
That's
Hmm.
the
Hmm.
opportunity that India has. Okay.
Hmm.
Now, so this opportunity is for every one of us. Okay. That we can only participate in this opportunity by India will grow, and we can only grow if we participate in through this by investing in equities.
Hmm.
Okay.
Hmm.
Because
Yes.
if India has to achieve this, companies has to grow. Right.
Hmm. Hmm.
Now, till now, we were more of a service oriented economy. So services account for a major part of your economy, services and agriculture. Right. What I see is that for such a large country like India and such a large population, we have to focus now on manufacturing. And the
Hmm.
next
Hmm.
driving factor, right, apart
Okay.
from services, will be
Hmm.
manufacturing.
Okay.
Right.
Okay.
So if India has to come to that 25 to $30 trillion economy, we have to
Hmm. Hmm.
really ramp up our manufacturing facilities.
Hmm.
Right.
Hmm.
So I
True.
think there are lots of opportunity in manufacturing sector, right, which
Hmm.
includes
Hmm.
auto components, which includes electronics, which includes heavy machineries, right? All this will have a huge impact on the Indian economy, right? And
Hmm.
with the whole global shift in supply chains, right,
Yes.
we'll
Yes.
see that there is huge opportunity in India when it comes to manufacturing as a segment, right? You'll
Yes.
see a
Yes.
lot of auto components coming here. We
Hmm.
always in mobile telephone, we have become quite a big player in that. And slowly we'll see on electronics, consumer durables,
Hmm.
and then
Hmm.
heavy machinery. That's a one
Hmm.
big thing which I see it's happening, right?
Okay. Okay.
Second big segment can be on the green energy side, right? We have
Yes.
a
Yes.
huge source of sunlight. We have a windmills. So I think, and with the whole world, I'm saying green will become a major thing. Sustainability
Hmm.
in green
Hmm.
will be a major thing, and that's
Hmm.
where I think India can be a very big contributor,
Yes.
right?
Yes.
So I think that's another segment which India should really focus on,
Hmm.
right?
Hmm.
Third is that urbanization is going to happen, right? So your airports, your freight corridors, your high-speed rail, all is designed to elevate the connectivity, right? So that is another theme which will going to happen for a long period of time, right? Technology, we are anyway world's best when it comes to UPI or the interbank transfer money, right? We
Yes.
are among
Yes.
the best in the world, right? And we produce the maximum numbers of engineers in the country, right? So I think
True.
tech will always remain a major source of us, and with
Hmm.
the we'll leapfrog here. So directly, our engineers can directly learn the AI part of it, the cloud computing, right? So that's where when I see that there can be huge opportunity for Indians, right, where they can use this. The last and most one of the other important thing which I'm saying that COVID has been a very big blessing for us, as right from apart from the some of the losses what we saw, but from a economy perspective can be big blessing. So because what happened is that earlier before COVID, from our services we used to only get not a very high research work. We used to always get like basic work on that part because every company in US wants to keep that research centrally to their own company. But in
Yes.
COVID,
Yes.
they realized that even their employees are working from home and data can
Hmm.
be leaked from anywhere else.
Good.
So
Good. Good. Good.
now what they've done is that they're starting setting up global capability centers in India.
Hmm.
Right?
Hmm.
They have their
Hmm.
own
Hmm.
offices and they
GCCs.
hire
Yes.
people in GCC. That is another big segment here. Right. And
Hmm.
now earlier
Hmm.
you've never seen engineers passing on getting a 50, 70 lakhs rupees salary in India. Now that
Yes.
has become
Yes.
a reality. Right. So you see a
Yes.
lot of
Yes.
engineers instead of going abroad, they don't mind staying
Hmm.
in closer to home. Right. With
Hmm.
the
Hmm.
family and
Hmm.
as well as purchasing power parity, you are earning far better
Hmm.
than your global peers. So that's
Hmm.
another big segment which I think in. Okay.
Hmm. Hmm.
Apart
Hmm.
from all this, what is going to be a driving factor for India, right?
Yes.
Is the young population, right? It's aspiring India, right? Now we all aspire to get better and better, right? A lot of people from a poor are coming to middle class and upper middle class, right? The good part is that a lot of female workforce is coming to the organized sector, right? And that leads to dual income families. Okay. And once you have a dual income family, right, you have a higher disposable income. And once you have a higher disposable income, you have a potential to save more as well as spend more, right? So that may drive the another big factor for the country, right? A lot of people will start saving their money and investing for long term, right? This is where the financial service industry will become a very big segment going forward, right? And at the same time, when the female workforce comes in, right, you will see in terms of footwear, in terms of clothing for female, right? As well as the consumer durables thing, like your washing machines and all that stuff, will be required, right? That's
Yes.
another segment which will also get a huge impetus going forward.
Yes.
And
Yes.
last but not the least, I'll say tourism is another big industry, right?
True. For India, it
Because
is just.
people want to go and spend money now.
Mm.
Gone are the days where people used to only save money. Now people, if you go to airports, it's all full all the time, right? So people will like to go and spend money, right? Great is the easily available, right? So I think that tourism is another big segment which can grow if really government act very well in this part of it, right? And that can be another big segment going forward. So these are various sectors which I think that can really work for the from a long term perspective.
Yes, yes. And I was reading a blog as well on Financial Times as well. And I got to know that in India, only 4 to 5% of the population is invested, and still we have like a $3 to $4 trillion of market cap. Whereas in US, like we have 66% or almost 60% of people are invested in equities and mutual funds and pension funds and so on. And they have a $30 trillion or $40 trillion of market cap of stock market. So I think there's a huge potential coming in, as you said, that the wealth is also generating a lot for people, and people as new platforms, online platforms are coming in, so people will invest more, they will know how to invest, they will take help of financial managers, wealth managers and so on, and they will try to invest more. And I think that this number should increase, like this 5% of the total population. I think in the coming times, by 2047 or even 2050, India should be like 10-15% at least, or even 20% invested into the Indian markets, and that will give a huge boost. Yes.
So this always work from perspective that see our per capita income, right? So when it was like $1,000 to $1,500, okay, most of the money will go for roti, kapda, and makan, right?
Okay.
You will look
Yes.
after
Yes.
your house, food, clothing, and staying, housing, right? Now, once your income from $1,500 goes to $2,000, then what happens is that you don't start consuming 4 times for your food, right? You could spend similar amount of money on your food and clothing, right? And what happens? The remaining 500 goes to your better education, the consumer durables, and so on and so forth. Now the same number, right, is now 2,700 to 2,900, $2,700 to $2,900, right? Now your basic necessities will not take you more than $2,000. So remaining $700 to $900, right, is for savings and as well as your lifestyle goods, right? So that's what I'm saying. That's where the saving culture will come in. Earlier, people didn't have money to save. They were because if your income is only $1,000 or $1,500, most of the money will go to meet your basic needs. But now, since you're earning $3,000, right, your basic needs are taken care. So now you have huge disposable income. From there, you start planning for your long-term goals, buying a house, buying a car, giving good education to your children, right? And then that's where the starting of saving culture comes in, right? And when you have this tech platforms, which makes your investing journey so simple, right? Then the cycle will just keep on accelerating, right? So reason is very clear that because in US the number is far higher, right? From this 2,900, we'll go to 5,000 also, you go to 7,000 also, you go to 10,000, go to 15,000. See the
Yes.
potential people will be able to save incrementally, right? So that's where this whole saving and investing culture will come, right? So earlier people are not investing people because people had very limited resources also, right? And now when the dual income family comes in, say if both of you are earning as $2,000 and $2,000, you'll have $4,000 as a household income now, right?
Yes.
So your
True.
potential save increase quite a lot. And this is where the journey of a wealth manager also comes in. As I say, there's a huge opportunity for wealth managers because this population, right, it is going to increase by leaps and bounds, right? And we require lots and lots of wealth managers to cater to this need, right? And that's where the platforms will help a lot, right? To make sure that the journey is seamless, right? And you can reach to every nook and corner of the country.
Yes, yes, that's true. And as Piyush Goyalji said that if you're not investing in India, you are missing the train then. So, so
So
correctly,
coming
I'll
to
ask.
this, yeah,
Yes,
so
yes.
just adding to this line. So someone asked Warren Buffett that what was the biggest reason, right? So both Warren and Charlie, that what is the biggest reason for success? What is the one thing which you tell is the biggest reason to become a wealthiest person in the world? right? So people thought that he will give answers intelligence, he'll give answers patience, he'll give answers stock picking, right? You know what the answer he gave in? I was born in America because I was
Oh.
born in the country which was growing, right?
Hmm.
And
Hmm.
I could benefit from there. If
Yes,
I was
true.
born in Afghanistan, the same amount of knowledge and patience and discipline,
Obviously.
would not
Hmm.
done anything. No one has
Hmm.
known me
Hmm.
because I was
Hmm.
born in the right country at the right time, right?
Hmm. Hmm.
And with my all my hard work, sheer patience, and everything, I've created this. The same applies for India right now. You are
Hmm.
in the country which is among the fastest growing economy in the world,
Yes.
right? So
Yes.
here's the huge opportunity for you,
Hmm.
right? So as I always say, I'm lucky to be in the right country at the right time. Now it's all about your hard work and your patience and your discipline. That will take you to the next level, right? So what I always say that India is the land of opportunity right now, right? There's huge potential going forward, right? It's all about you that how exactly you can leverage this one.
Yes. 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 True. And coming to our final question, which will be for our investors from your invaluable insight, which I'll ask. So, how a person, let's say, I'll just take an example. A person is earning 1 lakh, say, at present, monthly, and he or she wants to build a portfolio in 30 years or maybe 35 years of approximately 100 crores. Okay, what should their steps be, and what should you believe that they should do to achieve that goal? And is it achievable? Because nowadays people feel quite disheartened that we are earning only 1 lakh or we are earning only 1.5 lakhs, even after, because the tax is also there, you're managing family expenses are there, so they're not able to achieve a goal which they are seeing. So what should they do? That's my final ask for you, from your side, because our audience will quite enjoy this one.
So the first thing which I tell to all youngsters, okay, if you want to create wealth, you have to
Hmm.
follow this mantra. Okay, what is this mantra? Is that I earn, I save, and what is left is spending. Right? The whole world does the reverse of it. I earn, I spend, what is left is saving. Right? But when you're following this earning, spending, and saving, right, then you don't have any control over spending. If you don't have any control over saving, spending, you don't have any control over soul. But if you follow a reverse approach that I earn, I save, maybe 20%, 30%, 40%, whatever I can save. I'll save that money. And what is meant is to be spent. And you spend that money creatively. And since you've done your savings, that will only help you to create a long-term portfolio. So what I'll say that if you can follow this, earn, save, and then spend, right,
Hmm. Hmm.
then you'll be able to achieve all your goals in life.
Yes.
Nothing is
Yes.
impossible then. Okay. Now coming to the first thing is that do you require a 100 crore corpus? But you don't require a 100 crore corpus, right? So if I give a broad number of what someone requires, okay,
Hmm.
if someone gets 10 crore rupees,
Hmm.
right,
Hmm.
uh,
Hmm.
that's a good enough corpus for one to have a very good lifestyle, right? Provide good education to your children and have a happy retired life, right? So I'll say the first number that if you have got a 10 crore corpus in India, that's a very good, decent corpus to continue maintain your lifestyle, right? And if you want to upgrade lifestyle, then 25 crores is a good enough corpus, right? So what you require is 10 to 25 crore corpus. Once you have that, you can say I'm financial freedom, right?
Oh.
I have enough money to take care of all my expenses, to have a very good retired life and providing good education to my children, right? So that is what you require as a individual, right? Now coming to say someone, even if earns say a lakh of rupees, right? Assuming it's a dual income family and both husband and wife earns 1 lakh rupees, right?
Mhm.
So they earn 2 lakh rupees, right?
Mhm.
From
Mhm.
that, they should be easily able to save 50,000 rupees a month,
Yes, true,
right?
true.
And
Mm.
from this 50,000 rupees, right? Assuming that the market only gives you 12% return over a long period of time,
Yes,
and they
yes.
keep on increasing this investment by only 10%,
Hmm.
right?
Hmm. Hmm.
So your salary normally increase by 10 to 15%. Even if you increase your
Same increase.
investment by 10% every year, in next
Hmm.
30 years, you can create a 40 crore corpus,
Oh my God.
right? So
I didn't
even with
imagine this. Hmm.
yeah, so your investment amount is only 10 crores, whereas the portfolio value will be 40 crores, right? This is where the youngsters have the biggest weapon in their hand is time, right? So, and that's only possible if they keep on saving this money every month and increase the investment by 10% every year. It's not a big amount which I'm talking about. So anyone can achieve this corpus, right? And it's a very big corpus to make sure you have an amazing lifestyle all your life, right? So idea is that 1 lakh to 2 lakh rupees is a very, very good number, right? What you're talking about, only 25% of your savings, which anyone should be able to do that, right? And then keep on increasing this by 10% as your income increases, you'll be able to achieve this corpus, right?
Nice.
So don't think from that, okay, I have to save 50-60% of the money. No.
Okay.
Save only 20-25% of the money, but that money, you're not going to touch for next 30 years.
True. That's the main thing.
The better is more about, I'm not touching this money for next 30 years.
Time, yes.
Right? What people do is that people start saving 40-50% of the money, but after 3 years, 4 years, they
pull out.
break the money and they say, okay, I have to buy a new car or I have to buy a fancy bag or something like that. That's not way investing works. Investing only works that you put 20% or 25%, but that money you're not going to touch for 30 years. That's how the wealth is created. Right? So that's the mantra of, I'll say to all youngsters, earn, set aside 20-30% of your money, which you're not going to touch for next 30 years.
Yes.
Right? You will create a huge corpus, and that's the most important goal, because we all have lived our life independently. We never want to depend on anyone else for our financial needs. Right?
Yes.
And today the world is changing very, very fast. Right? So after 15, 20, 25 years, you don't know whether you are employable or not. And you don't want to work you don't want to work all your life. Right? So what I always say that start early, save for next 25 years. You should have enough corpus by 15 that you can say, I can do what I want to do. So that's called financial freedom. I'm not working for money anymore. I have enough money to take care of all my expenses. Right? Now I'm working for my passion. So I always say you only got one life. Right? Make sure that you start saving early, invest for 30 years, so that you can, after that, you can clearly say that I can do whatever I want to do.
Yes. So it was quite exciting and a mind perspective change, to be honest. And our audience will love it, especially the young audience, the students in finance will love to see how you guided them and how you gave them an advice which they might be not getting it from somewhere else. So thank you so much, Nikhil, for joining in the Prudent Finance Great Conversations podcast. We had so much of a good time with you. We hope to see you back in some of after the episodes and so on. Our audience will love this episode a lot. So thank you so much for coming in, and thank you for creating India's wealth journey easier by Etica and other platforms as well. So thank you so much, Nikhil. Thanks a lot.
Thanks a lot, Shubham. Thanks a lot for your time.